You are listening to Charting Wealth's weekly review and forecast for the week beginning the 11th of April, 2016. Thank you so much for being with us. What do we have going on? Well, we have the market in a continued uptrend on the weekly chart. When I say the market, we always start with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. It tracks the entire market. What we see going on is we have a crossover back on the 4th of March, where the weekly chart rolled over. The weekly chart actually started moving up back on the, let me see here, the 19th of February, and then it gave us a signal of a crossover on our MACD indicator, the moving average convergence divergence indicator. Whenever that crosses at the same time with the derivative oscillator, it's typically a strong signal for us, and again, that's in keeping with what we've seen occur in the past. We use the charts like a roadmap. And you know, if you're going to your mother's house and the roadmap works, you know, you keep using it. If all of a sudden your map gets old and it's not working anymore and they've changed the roads, they built a bypass, or they've closed an old road down, or a bridge has gone out, then of course you look for a new one. Well, as long as our map continues to work, we continue to use it. We're always looking for a better map. So we love to hear from you. If you've got a better map than the one we're using, we're always happy to change. This one's been working for quite a while. It's working quite well. So the market crossed over going up back on the 4th of March. It's continued to move up. For the last 2 weeks, well, almost 3 weeks, the market's really topped out at about the same spot. In fact, you could almost go back 4 weeks. On the 19th, it closed really about where it topped out back on the 18th of March. And again, we're using the dates that we give are always the Fridays where the market ends. So that's where we are as far as the market went this week. Over the course of the week, it ended up on Friday closing up 0.19%, and that's not for the whole week, that is for Friday, but we have a green up box with a wick on top. Derivative oscillator lost a little bit of the speed that it had from the week prior that ended the 1st of April. So again, we do have a strong up moving market, but it does appear from where the prices have topped out, going all the way back to the 18th of March, that there has been somewhat of a sideways slide. So just pay attention to that. Our derivative oscillator, our MACD, those things on the big charts are still showing up movement, but that is just a caution. We always just pay attention. Prices mean a lot to us. Now we're going to look at the daily chart and see what we see. Of course, we see the market opened on the 4th. That was an up day. And then the market slid down since then. Again, a little bit up on Friday, but it has been in a crossover going down on the daily chart since the 24th of March. So it did move up some, but we're talking about, when we start talking about our derivative oscillator and our MACD, those are mathematical formulas that give us a good idea as to the surging of prices, the volatility of things. I mean, if you want to read more about both the MACD and the derivative oscillator, please go to our website or pay attention to Wikipedia, go to Investopedia. There's all sorts of searches you can do on those terms. Read all you can about it, study it, listen to our videos. But the derivative oscillator and the MACD are two indicators that we really like to use. The primary one's the MACD. Derivative oscillator in conjunction with that can be helpful to us at times. So that's where we were. Now, when we go on the daily chart, when we go back to our weekly chart, and we move over to SPY, which is a Standard & Poor's 500, that's 500 big companies. Because it's so much of the volume of the market, many times it looks similar to the total market. It's not always the same. For example, on Friday, the total market was up 0.19%. The S&P 500 was up 0.27%, so it was up more. But a lot of times they look very similar, the charts do. They can be radically different at times, but it's sort of hard for that to happen because you have so much of the volume depicted in the S&P 500. But if another part of the market that's not represented by the S&P 500 has major problems, then you can see a big difference. But typically the total market, usually it is similar, and that's what we see here. We see again the S&P moved, topped out about the same point where the market ended this week. It topped out on that way back around, actually, yeah, the 18th of March. So we've got 4 weeks where the market's topped out at the same place where it closed at the end of the past week. And we see the MACD is still diverged significantly from the signal line. When we see it converge and cross over, then of course we can expect a down move on the way or having already occurred. And so we see that still moving up and the derivative oscillators still strong. So again, just a note of caution when we don't have higher and higher price closings. Now we're going to look at the daily throughout the course of the week. What do we see? Well, again, Monday was an up day. Then the market moved down since then. It closed right around the 2-day trend line. Again, market has been in a negative on the S&P 500 since the 23rd or so, 24th of March. Now, let's next move on the weekly chart to the Qs. What is the Qs? Well, that's the NASDAQ 100. What do we see there? It's continued to move up. Actually, the NASDAQ has continued a nice, clean stair-step move up. Unlike the total market in the S&P 500, it's continued to move forward. It crossed over right around the end of the week on the 11th, and at the same time that the MACD crossed over, the derivative oscillator crossed over. It's been moving up since all the way back on the 19th of February, but again didn't cross over going up until the 11th of March. So the NASDAQ 100, nice strong up movement as far as the weekly chart goes. And remember, the big money's always in the weekly chart. If we look at the daily, what do we see going on? Well, the daily just crossed over at the end of the week. Around the 7th, the 8th is when it crossed over going down. It actually crossed over going up back on the 29th. Big surge up on the 30th. What we saw happen over the course of the last week is an up day on Monday, the 4th, and then pretty much slid sideways since then. In fact, the market closed, the down movement on the market was about where the up movement started, the down movement at the end of the week about where the up movement started at the beginning of the week as far as the NASDAQ 100 goes. So stronger chart there, feel better about that chart, not long in the tooth like we see on the total market in the S&P 500. Now let's go back to our weekly chart and see where gold is. What's actually going on with gold? Well, what we see happening with gold is gold crossed over going up strong back around the 8th or so of January and then just moved along, moving up nicely until it started surging up around the 29th of January, and then it blew it out for a few weeks. Then the market topped off around the 11th of March as far as gold goes, and it started moving down since then. It did end up for the week. We had a green candle as far as the week went on the week ending this past week, the 8th of April, but it is in a downtrend as far as if we are drawing trend lines. We don't have a crossover going down yet, although it does appear that the MACD is getting closer to the signal line, and of course derivative oscillators lost a lot of energy. So we'll just continue to watch gold, still in a confirmed up move on the weekly chart, but has lost that energy moving it up. So let's now briefly look at where gold was on the daily chart throughout the course of the week. After a good bit of down movement, the week opened up for gold, and gold slid sideways a little bit on Wednesday and then went back up again. So up day on Monday and Tuesday, little down on Wednesday, up on a lot of volatility on Thursday as far as gold went. I mean, a lot of down movement and up movement. It was an up day for gold. And then, of course, Friday was a big up day. It's not yet crossed over going up on the daily chart, but that may very well be on the way. So that is where we are. Gold technically was down on Friday, 0.15%. So continue to follow that if you're a gold bug and like to see what gold's up to. Gold's always just an interesting thing to follow because when the market gets jittery, gold can give you a good idea as to how serious those jitters are as far as the kinds of price movements that you see there. Now, let's talk about what affected the news and the markets over the course of this past week and what you might need to pay attention to over the course of the coming week. We saw that Janet Yellen, the head of the Federal Reserve, says that our economy is healing. She says that we're not in a bubble. She says that the financial crisis is past, that we are seeing our economy heal from all of that. We're not in any kind of bubble. She doesn't see any evidence of imbalances, such as clearly overvalued asset prices, and noted that the labor market in the U.S. is on the mend. Now, I don't buy into that, but again, I'm paying attention to what the charts tell me. I am not a prognosticator. I am not a Rasputin. I simply look at the charts and let them lead me. I urge you to do the same. What else do we have going on? Well, the U.S. Treasury is imposing new rules on tax inversions. We saw on Tuesday this last week that the government imposed new rules that are really set up to make it more difficult for U.S. companies to combine firms with other companies, foreign companies that is, who are attempting to reduce their tax liability. Of course, that had an immediate impact on Pfizer and Allergan. They had to end up calling off a pending multi-billion, like $160-something billion merger. Wow. What else do we have going on? Well, it's going to be affecting the guys out there who do any kind of investment advising. This fiduciary rule has been finalized, U.S. Department of Labor. They're going to make basically, just like attorneys have fiduciary obligations to their clients, you're going to see now that financial advisors handling 401ks are going to have fiduciary very high obligations to their clients. It's going to totally change that world, and hopefully for the good. Let's see what else we have going on in the market. Oh, this is a killer. Almost half of U.S. student loans are in the red. They are behind. They are not current in their payments. That impact, $1 trillion impact. The department's loan portfolio is $1.2 trillion. Imagine if you owned that, if it were in the private sector, and over half of your loans weren't current. You want to talk about a bubble there. Wow. What else do we have going on? Well, let's delve in a little bit more to what went on in that Fed meeting that we told you about last week to pay close attention to. Well, the minutes of the March meeting were released, and they suggested that the price hikes will come slowly as far as the FOMC raising rates. We're going to see at its April meeting, they said that such a move would signal a sense of urgency if they tried to raise the rates in April that they did not think was appropriate. So again, more free money in the market is going to keep driving the market up, good or bad. Why? Well, because when you add free money in, you can inflate prices, and inflating prices means, of course, the market moves up. And that's what we just need to continue to watch for, continue to be cognizant of, but realize that so much of that expansion in prices is related solely to what the Federal Reserve is doing, and that's what makes it scary. But of course, the Federal Reserve Chair tells you, don't pay attention to the man behind the curtain. Everything's fine. Believe the wizard. So again, it can work for a while. What did Abraham Lincoln say? You can fool some of the people all the time. All the people some of the time, but not all the people all the time. There is a day of judgment. Now, let's keep looking ahead, and hopefully it's not going to be upon us anytime soon. What do we have happening over the course of this next week? Well, I don't see anything that's going to really make the markets royal unless, of course, you've got lots of bad news, things that are just shocking to the market that come in. But, for instance, China's going to release its consumer price index on Monday. If that's really, really bad, yes, it could affect things, but I'm not holding my breath on that. We're going to see on the 13th U.S. retail sales figures. They're going to be released. That's Wednesday. You know, again, if they're really bad, that could, and if the market wants it to move it, of course, it could. But again, all things being equal, not holding my breath. On China is also going to report on Wednesday their trade balance. Now that, again, pay attention, listen out for it, but don't hold your breath. And again, if something's really bad and shockingly bad, yes, it could push the market down or it could make it soar. We're going to see on Wednesday also the Bank of Canada's Monetary Policy Committee is going to meet. They're going to set interest rates. Then on Thursday, you're going to see the Bank of England Monetary Policy Committee meet to set interest rates. And then finally on Friday, China's going to release its gross domestic product, its industrial production, and its retail sales. Well, that is where we are, where we've come from, where we might be going, the kind of news that moved the markets, the kind of news that might move the market in the coming week. I just hope that you are paying attention, listening to us every day. We are here to help you, here to help direct you, here to guide you so that you're able to start doing your practice trades, that you're able to get out there and do these virtual trades in the market, start gaining that knowledge, figuring out what's really going on. And then when you, and only when you, have experimented, practiced, feel like you know exactly what's going on, well, as close as one can with the market, that you then will go out there, make your own decisions, use your own money. But in the meantime, as you're training with us, we encourage you, go set up that virtual trading account, become a virtual millionaire, start listening to us, following the trainings, listening every day for just a few minutes. It's like typically 7 to 10 minutes. And practice, practice, practice. Remember, it's perfect practice that makes you perfect, and you want to do everything you can. But it's not something you can just do on the weekends, just do occasionally. You got to pay attention to the market a little bit on a daily basis. And again, what you pay attention to, what you spend your time doing, what you concentrate in, you're going to get better at. So please, let us hear from you. Follow us on Facebook, Twitter, Instagram, YouTube. Go to the website, chartingwealth.com. Sign up for our daily newsletter, which will also include this weekly review and forecast. Doesn't cost you anything. Also send you 2 bonuses. You'll get our How to Read a Stock Chart video link. You'll also get our layout at freestockcharts.com. We appreciate you. We love to hear from you. Please just ask us the questions. We'll do all we can to help at chartingwealth.com.